I would like to thank everyone for tuning into this podcast episode where we'll be interviewing Donald Stalter, a partner at Global Founders Capital. By way of general context, this podcast series will profile alums and members of the wider University of Chicago community by exploring how their compelling professional journeys intersect with wider cultural and societal developments and experiences. We are very fortunate to have Donald with us as he has had a long and successful career at the intersection of finance and technology and entrepreneurship. Specifically, he has worked as an investment banker on such historic deals as Google's acquisition of YouTube, has been a founder both in the UK and US, and has supported many companies as an investor and advisor, and most recently at Global Founders Capital, a firm with a focus on early stage investments and helping companies throughout the growth cycle. Well, first of all, thanks so much for taking the time out for this discussion. What I really find interesting about your career is that it basically covers the entire sweep of tech investing since the second wave of web development with Facebook, etc. I think your experiences and perspectives are a really good way to understand that history. I believe you were at the college kind of at the end, peak and then the end of the dot-com bubble. How much was that central to your interests as an undergrad, and how much did that inform what you studied and early career plans?
Thank you, Dominic. Yeah, so I was, I was an undergrad at U Chicago from 2000 to 2004. So I started right during kind of the dot-com bust. I'd lived between the U.S. and Europe during high school. My dad's a tech entrepreneur, so I'd seen a whole variety of startups be built. I'd interacted with a variety of venture capitalists. So I had kind of a basic sense for kind of that world, kind of vis-a-vis the telco sector, where he was active in optical networking and communications equipment. Then going to the University of Chicago and taking courses in economics and anthropology and sociology across kind of the core, which is sort of a 2-year requirement for all students, expanded my interest to way beyond just, startups and technology, and sort of, opened up my eyes to a whole variety of different categories, consumer trends, and sort of how people thought about brand and how they wanted to be exposed to particular products, product biases kind of within consumers, and the economics around those. And then, had the good fortune of living in Berlin during my third year at the college. So continued to sort of build my international network, and met a whole variety of entrepreneurs while I was there. I actually worked on a bus line between Berlin, Paris, and Brussels during kind of the weekends, serving beer and hot dogs to travelers across Europe. So that was sort of a fun entrepreneurial foray or side gig that I had. And, I was also helping a whole variety of friends put together art galleries in Berlin. And I was exposed to kind of a nascent scene there where, literally there were no, major, call it technology entrepreneurs, except for just a few inklings of them. And, over time, it's become a massive, massive hub. And so, I'd say that sort of the confluence of my experience during high school and then at the University of Chicago across a variety of courses gave me a base to look at the world that was pretty differentiated from, a lot of folks.
I think there's always been sort of the students with an entrepreneurial mindset, and they seem to get so much more out of their college experiences because they're already looking at how to connect what they're studying to ways that are sort of, kind of seeing how things are and already beginning to think about how to change that. And I think one of the things that's really interesting, and we might touch on this in terms of kind of maybe some of the mentorship you do in this space, but the attitude about college and the attitude about what you do during those 4 years, especially for anybody who's entrepreneurially minded. I mean, you obviously have people, who don't even go to college because they've already begun kind of their entrepreneurship journey, and then who are at college are juggling that along with everything else. And I think sort of maybe sort of when we get to it, I think it might be interesting how to just talk about the pros and cons of that as sort of as a college experience, sort of being entrepreneurially minded, and that might expand at opportunities, but then perhaps you might miss out on some elements, the core college experience. But it sounds like you had a fantastic time, and definitely, yeah, I mean, so already you had some of kind of those international connections and international instincts, which I think we're going to sort of touch on as your career develops. Pretty soon after graduating, you worked at Credit Suisse as an investment banker, and you were part of a number of sort of historic deals, such as Google's purchase of YouTube, and which obviously was a deal which defined the beginning stages of social media. How did these experiences shape your skill set and investing perspective? Because it, presumably working at an investment bank is, especially back then, tech investment and sort of the startup culture was still being developed. What skill set and perspective did you get from that? And I guess we're just going to trace as we go along how you applied it and how that changed as you went from sort of the investment banking space to more of the direct investment space.
hmm Yeah, I was really lucky with Credit Suisse. It was led by George Boutros, who was one of the most well-known investment bankers in technology at the time. The group did deals like Disney, Pixar. We represented Google on the buy side across every single acquisition that they did. kind of ever. We did DoubleClick, we did YouTube, and we did Urchin, and there was a whole sort of flurry of deals that Google did back then to expand and to grow market share. Simultaneously, we did deals across Latin America. So I worked on a business called B2W, which was a merger between kind of two different Amazon-like businesses. In Brazil, it was kind of the Amazon of the Amazon, a $3.2 billion deal, which was sort of watershed and absolutely just crazy. It was a bunch of, sort of billionaire entrepreneurs and investors coming together to negotiate. And I remember the head of our group toiling away until 3 a.m. every single day, building, decks and models to make sure that we got everything right. And, that was the investment banking experience. You met incredible entrepreneurs, you met stakeholders in the technology industry, and you worked extremely, extremely hard to kind of sharpen your analytical swords. And, it was a fantastic experience. I was very, very fortunate to be there and carried that network forward to a whole variety of different boutique investment banks and venture capital firms.
Yeah, because Google was founded, what, sort of 99, 2000? So presumably this was kind of the second stage of Google's journey as a company. And I think what sort of really strikes you, one, and I mean, obviously it hasn't changed, but just sort of the speed of development. From the outside, so much happens in a month, so much happens in 6 months in terms of the market. And I guess at an investment bank, because you have sort of so much concentrated intellectual capital, you have so many sort of contacts and people that you can reach out to in terms of sort of understanding sort of what needs to be happen to a deal to advise your clients on future deals. Yeah, and I think presumably coming from a Chicago background, having that sort of multidisciplinary skill set probably was a really good grounding in terms of your future career.
Yeah, absolutely. I think the U Chicago network was also incredibly helpful. I met a variety of folks along the way who attended the University of Chicago, both within companies that we represented, as well as at the investment bank, as well as at a variety of venture capital firms. Our alumni network is incredibly strong, but also from a mentorship standpoint, several of my very close friends attended the University of Chicago. The head of Goldman Sachs Europe for a very long time was a U Chicago grad, and I spent a ton of time with him in London, asking for his advice and thoughts around transactions that we pursued. So thrilled and honored to have been part of that community and to be bringing it forward.
Absolutely. And I'm sure that won't be the last sort of stage of Chicago sort of going on the journey with you through your career. I could be wrong about this, but it seems that you went straight into an investor role after Credit Suisse. And I think this is probably useful for students and for people sort of early in their stages in the career. It seems, and you can correct me if I'm wrong, but it seems as though this was a bit of a jump from traditional model of working at a firm and sort of and the security and kind of the established career path that indicates. What were the motivations behind it? Just explain that ecosystem and how angel investors fit in, how VC funds fit in, how private equity fits in.
Absolutely. I mean, sort of the role of an investment bank in a lot of respects is to help companies do transactions, and you can be on the buy side, you can be on the sell side, meaning that you're representing a business to sell it, or you're representing a business to buy another business. You can bring a business public, and there are a variety of different debt transactions as well. I happen to be in mergers and acquisitions, which was all about selling and buying businesses. And the motivation there is to make sure that you can get the highest price possible or the best price possible if you're a buyer. Sometimes you're looking at a business from the standpoint of, how can we accrue kind of the most value here possible? And, you're marketing that opportunity to potential buyers, to potential investors. Whereas like if you're the buyer, you're evaluating it from, a value standpoint and trying to figure out how to get the best price. And so it's all about sales and negotiation. Whereas with investing, which is a lot more sort of oriented around generating capital for your investors, for people who invest in you, is about getting in at the right price and about sort of managing an investment that you've made and making sure that you're, driving a company to be very successful that you put money into. And so, the role is very different from being a more analytical and maybe conservative thinking oriented role. And, you're looking at finding as many potential opportunities to invest in as possible. You're networking with successful founders. You're networking with successful executives to turn over rocks and find exciting deals to do. And you're collaborating with other investors to co-invest and to bring as much value as you possibly can to those companies. This is a completely different role from investment banking. The role that I took on kind of post Credit Suisse in San Francisco was with a fund in London that was a spin out of Jefferies Investment Bank. And we did growth deals. So we invested, at the later stages in businesses that were already generating meaningful revenue, oftentimes profitable, typically in the software space, businesses that were growing at 20 to 30% sort of year over year in some cases, where we maybe put debt on the books and then sold off to another private equity shop after a couple of years. And it was a dramatically different experience too, because, I went into investing in 2008 when the market had become more of a challenge, and ended up, actually doing just a handful of deals during that period of time versus when I was investment banking, the market was a lot hotter and there were a lot more kind of deals to do. So it was a dramatic slowdown. And culturally speaking as well, being in London, it was a completely different sort of technology environment. It was a completely different investing environment. And there were some fantastic entrepreneurs that came up during that time, including David Helgeson, who founded Unity Software, Daniel Ek, who founded Spotify, the founders of Zalando. There were a whole variety of multi-billion-dollar businesses that kind of came out of this time period. But kind of given our strategy, we were going after slightly more conservative businesses that oftentimes were bootstrapped. And, so I got exposure to a whole gamut of different opportunities, while doing growth equity in London.
Could you go into a bit about City Deal? Were you a founder of that, or was that again sort
Yeah.
of as a more an investor role?
During the time while I was investing in London, I met a whole bunch of entrepreneurs. In looking at businesses, you attend a lot of different conferences and events, and you're always networking, connecting with people. And it just so happened that I met some really well-known entrepreneurs out of Europe who were excited about building a whole variety of different businesses. And we sort of whittled down the list and thought through what made the most sense at the time. And it turned out that in the U.S., a business called Groupon out of Chicago actually was on fire. And, there was no similar business in Europe at the time. In fact, there was no similar business outside of the US really at the time. And so I was just moonlighting and literally spending time with these folks over at Liverpool Street Station, right above the station. There was an old office that had been occupied by stockbrokers, but we got it for really, really cheap. And we built out a team, and we got a group together that started, banging on phones all hours of the day, calling spas, calling restaurants, calling all sorts of service providers across London initially, getting them into a database. Then we set up a website called City Deal that was relatively under the radar, and we loaded as many deals as we could onto it. And we started to put those deals onto social media. We started to buy Google AdWords, and we started to see liquidity. We started to see people buying those deals and get really excited about those deals. And so then, I was still at the fund, but moonlighting building this. And we decided to expand into Liverpool. We expanded into Manchester. We expanded into continental Europe, into Germany, into France, all across Europe. And then I decided this was what I wanted to do full time. So I joined the team there as a founder, and we ended up raising a significant amount of money, and ultimately building it over the course of a year and selling it to Groupon, which was fantastic. I mean, we grew from zero to, I want to say, 600 employees over the course of a year. We were literally hiring 7 new people every week, and it grew like wildfire. Our numbers were phenomenal. There are a whole variety of copycats out there as well. There were, businesses that went for the same category that for whatever reason, some were growing quickly, others were, sort of struggling to raise money, but didn't get an exit. There were a few that went public, but ended up being kind of relatively small. And I think we were very, very lucky in selling to Groupon when we did.
I think there's a couple of things that are really interesting about that. So I guess thinking about sort of the acquisition of skill sets and experiences, I imagine, as you said, there's sort of a big difference between working in an investment bank, which is you're an analytic sort of piece of a much bigger sort of entity. And then it seems as though, and then investing has kind of these creative slash relationship building elements to it. So it's a lot about building sort of a community around an investment, and also just the creative process of finding good investments. And then I guess being a sort of a founder, I imagine you were immersed in kind of the operational elements of a business much more than previously. And so I imagine, I mean, you were probably thinking about things like sort of HR and property management and that sort of thing. Was that the case, or did you have a horizontal set of responsibilities building up this company in such an incredible short of time, or were you still kind of basically around kind of getting capital raising for the company?
No, I mean, look, kind of as a founder, you wear a million different hats. I mean, we did everything from capital raising to building IKEA furniture to putting together KPIs and to incentivizing a team to make 100 calls a week to restructuring our teams to growing our teams to figuring out which were the kind of most relevant deals for the website to building out a content calendar. I mean, literally, we did absolutely everything in the early days, and it was a total miasma. But it was, it was the beginning of kind of the big bang, and we kind of had to do all those things. And we're scrapping around with four other people, literally in this small space, and just trying to figure out 24/7 sort of what the right approach was, that we would have an edge over the market and that we would grow as fast as possible. I think kind of very specifically vis-a-vis investment banking and investing, I kind of contrasted the two against each other, but sort of operations versus investment banking and investing is very, very different. It's a lot more of a practical and less theoretical set of skills where you're doing outreaches to customers, you're building relationships with those customers, you're negotiating with those customers, you're making sure that those customers get paid. Like, you have to make sure that your team gets paid. There's so much troubleshooting and there's so many little things, a million different little things that you're constantly worrying about to sort of move that ship forward. And you're constantly thinking about that versus doing a lot of analysis and sort of thinking around sort of the best way to present a particular business case across kind of banking and investing. It was a really interesting, exhilarating skill set, and I'd call it almost kind of like athletics in a lot of respects.
Yeah, no, and I think the international component is interesting because, I mean, how did the sort of the startup ecosystems compare between the US and Europe, and sort of how much of it was in terms of the example of City Deal and Groupon? So clearly kind of within companies and then sort of within applications and business ideas, you're obviously borrowing, or you're looking to other countries and saying, okay, there's this particular business that's getting set up in the US that seems to be doing really well. There's no reason why we can't have kind of the exact same business over here, because human beings are human beings, and they have the same sort of needs, and they want discounted consumer opportunities. So let's provide that over there. I mean, basically, was everything sort of popping up in tandem, or was it very much that UK and Europe were looking to the US at this stage in terms of not only kind of the specific ideas for companies and initiatives, but also how to build that wider ecosystem, or had there been, or were there those ecosystems that were already popping up organically?
I would say that because of the media and sort of the propagation of the startup ecosystem, there was already an organic interest in startups in the US across Europe. Absolutely. And I was in that ecosystem as a growth equity tech investor. Simultaneously, kind of the same mindset that we have in Silicon Valley is one that Europe was adopting at the time. I'd say that it was a lot more sort of, call it pre-professional, professional in terms of its orientation, and startups were still few and far between. In fact, venture capital, wasn't something that was very established even back then. And so I think, we were literally putting together a new playbook and a new way of thinking for a lot of people who we brought onto the team. And we brought on stockbrokers, we brought on folks who had worked at HR in big companies, to take on roles in a super fast growing company. We grew 300% year over year our first year. We had 1,000 deals on the website. And these folks who'd come from completely more corporate ecosystems to sort of adapt and adopt to that new style was no small undertaking. Like literally, we had to be sort of very hands on, spend a ton of time, and just sort of ingrain that mentality in them.
Especially back then, sort of just in general, the capital markets were much more consolidated. In Europe, the role of banks versus Europe lagged a bit in terms of hedge funds and other forms of capital. And I think it's sort of fair to say that there's probably a much deeper sense of entrepreneurship in the US. And so obviously there's innovation and entrepreneurship in Europe. And clearly those capital markets and those tech and startup markets have grown exponentially. But I do think there was sort of probably a really valuable cultural exchange, because there was something that was unique that was happening in the US at that time. And it must have been really exciting to kind of bring some of that to places where they were eager for it, but they just didn't have sort of quite the same history with it.
Absolutely, and I think that cross pollination, was that U.S. UK cross pollination was a thing that was prominent back then and continues to be. But there was a ton of talent from Silicon Valley that came to London. There were a ton of Americans who came to London with sort of that technology background that started startups, and they have continued to over time. If you look at sort of the founder of Deliveroo, he worked at a hedge fund in the U.S. Like there are a whole variety of UK entrepreneurs who are who brought sort of that American technology DNA. But I feel like conversely, like the mindset in Europe is very strong in terms of operations, in terms of execution, and there's a huge innovative mind. And the system has evolved to be as good, if not better, than in the US in a lot of different respects.
Yeah, and I guess tying in those experiences with your subsequent sort of the experiences that you had right after, which were where you were involved in sort of Groupon's European and Asian expansion, which was presumably related to the City Deal experience and acquisition, and then you had a senior role at Airbnb. I guess the idea of international outreach and cultural engagement, we've touched a bit about it in terms of establishing businesses or navigating the investment and capital markets. But in terms of just a product rollout, how much thought needs to go into local specificities and understanding the specifics of different markets? I mean, obviously, you need to understand with Airbnb, you obviously need to understand different rules in terms of what you can do with residences and licensing requirements and all that sort of thing. But I guess just generally more sort of more culturally in terms of a consumer base. How much were you involved in looking at the consumer profile and the relevant surrounding factors when you were involved in these companies that were obviously leaning really heavily into international expansion?
No, that's a really good question. I mean, so I think some of it harkens back to my days at Credit Suisse when we were doing mergers and acquisitions. When you're a big business based out of the United States that's raised a lot of capital but wants to internationalize, you might consider acquiring businesses that are very similar to you, like we experienced at City Deal being acquired by Groupon. When I was at Groupon, we acquired, I think, 15 other businesses that were in the same category across Europe, across Asia. We acquired a business in Taipei that was actually similar to Facebook in a lot of respects. And we sort of spun it around, restructured it, and turned it into Groupon Taipei. And so, literally, like our biggest goal, in addition to building from the ground up in a bunch of geographies at the time, was to grow as fast as possible. Like, literally, we had a ton of capital, we had billions in capital, and we wanted to make sure that we could be in every country around the world because there was Living Social and there were a whole variety of other big US contenders that were looking to internationalize also. And so, in some respects, with Groupon, it was anomalous because there was just so much capital in multiple different horses in the race, and people were constantly neck and neck. Now, whether that was the right strategy or not, from a sustainability standpoint, from a business success standpoint, is a question because Groupon did go public, which was wonderful. Living Social did not work out if you read about it from sort of an ongoing sustainability standpoint. Wonderful business, wonderful people, but a variety of other players sort of flamed out over time. Groupon itself has hit some bumps in the road over time as well, where some of the locations have not worked out, some of the processes and sort of business orientations have not worked out. With Airbnb, on the other hand, it wasn't necessarily about like growing kind of at all odds. It was about internationalizing the product. It was building from the ground up, and it was literally the way that we phrased or we spelled internationalization was IN infinity N. And so the idea was that you're building for infinity and you're going as deep and as wide as possible, kind of within each of these different markets. You're building it as if you're a local resident who grew up there your whole life. You're not going in and you're not buying a business and you're not expecting that revenue is going to sustainably maintain itself without really putting a lot of culture and soul and thought into the unit economics. And so with Airbnb, it was a lot more around like, can we build from the ground up? So we ended up sending a ton of people into various geographies around the world with, literally nothing but a backpack. And they'd go and they'd have to find sort of their first general manager for a market and then hire out a team to, acquire hosts and acquire guests on the website, to set the pricing the right way, to ask local people what their perspectives were on the PR around Airbnb, to do community events and to really, inculcate sort of the message across sort of, those locals. And I think in doing so, it just created a much more sustainable business. So if you look at, the market caps of Groupon and the market caps of Airbnb, they're very different. I would say though, M&A can be very, very successful for a business like an Airbnb, and they did acquire some exciting companies, but a lot of those were around technology and tooling to help optimize their pricing algorithm, to help optimize kind of their data mining capabilities. And so each business took a very sort of different standpoint, and each business was very, very successful in its own right, but took on sort of different strategies in terms of go to market.
And again, as somebody who's a consumer of these products, I mean, I think what's really striking is I think there's sort of a thesis, which is that regardless of cultural differences, there are certain universal needs, and obviously efficiency is one of those. Exposure to a variety of content is another, new experiences. And it seems as though, especially in kind of that stage of the startup sort of tech app development journey or period, that basically you saw massive international reach for either the same product or the same company or companies that are very similar. And I think the general thesis is that despite cultural differences, that everything that people were working on during that time period was touching on something universalizing. And we've obviously seen that with how interconnected everything is now and the global adoption of, if not specific companies or specific apps or specific technologies, but the general set of products and all that. Were there any examples where you ran into stumbling blocks that were a result of local specificities, where you had a product which was working everywhere else but didn't work in one particular country? And what are kind of the business calculations when you're trying to expand and you're coming into a place where you realize that perhaps that expansion isn't the best use of your time and energy?
Yeah, I mean, I think the kind of level of service that people experienced across countries with Groupon tried to be fairly consistent from a business standpoint so that we could optimize our unit economics and that we could roll the business out in an easy, predictable way. And we sort of had the expectation that people around the world would be happy with kind of specific types of food that would be sort of delivered at a specific temperature, that would be delivered at a specific time off the back of redeeming a voucher, and that we get great reviews in a consistent way if we were sort of consistent with, with sort of our customer care around particular products and services. But it turned out that every country around the world took a very nuanced approach to service and the way that they thought about various types of food and the quality of the food. But I mean, across the platform at Groupon, we had so many different SKUs. We had so many different items. I remember in the south of Japan, there was a whole set of pet restaurants. You could take your cat to a restaurant and take that cat to dinner wearing like little gloves and a hat, eating soup at a picnic table, and it was like $60 discounted from $300 or something, and people just went crazy. They went totally gaga around this. I remember it was like record breaking, and one day we sold like $30,000 worth of these vouchers, and there were lines in front of these pet restaurants, of just Japanese families, kids, women, just all across the board, just super, super excited about these things. But then there was an impact on the quality because the places were just so packed and crowded. And ultimately, people said that their cats complained one hell of a lot, and they ended up sort of canceling their vouchers with Groupon.
That's all fascinating, and it clearly something like Groupon, where you're dealing with sort of one of those some of the more elemental aspects of culture. It must have been just sort of a fascinating case study in terms of the preferences and the particularities. And even though there's a universalizing element that people want kind of efficient, technologically driven solutions, the way it feels and the way you need to shape the product is clearly, as in that example, is clearly shaped by local culture. And so it's a really interesting tension between creating kind of a globalized product, but obviously just inevitably having to account for local culture and all that.
Yeah, it was crazy. I mean, you want to, like, as a business, you want to be hyper scalable because you want to be able to make a lot of money. You want interesting unit economics. You want, happy customers, et cetera. But in sort of building a platform that scales in that fashion, like, oftentimes you'll ignore a lot of the nuances, and you won't move slowly enough to notice those nuances. And then you'll end up in train wreck situations where you lose a lot of customers rapidly to a competitor or what have you.
Is that perhaps an advantage that those coming out of sort of the European investment ecosystem might have, because there's many more sort of countries in close proximity that have a wider range of differences than, say, in the United States? Or does everyone sort of struggle with that tension between trying to be scalable in a number of jurisdictions or in a number of countries, but then sort of in that speed not taking account of local differences?
I mean, one thing that I will say about building kind of locally in Europe and in continental European country or in the UK is that, there are kind of greater capital constraints. It's harder to raise the same sort of level of capital very often kind of than it is in the US, which actually instills some level of discipline in founders. Founders then need to really find product market fit. They need to make sure that, customers absolutely love what they're building, the service that they're providing, to a point where it almost sells itself. And I feel like European founders are driven to roll up their sleeves and get to that point at all costs before scaling an opportunity. Whereas in the US, oftentimes, we'll come up with an idea that it's sort of 90% there, and then let's scale it. Let's show some growth, and let's keep putting money into kind of fixing it so that it works, and so that people want to continue to buy it. And so, two different philosophies, two different mindsets. In this economy where kind of capital is more scarce than it was, call it 3 years ago, I think the European mindset's probably more successful.
And it's interesting that you mentioned, and obviously, sort of the depth of the capital markets is obviously incredibly important. And yeah, and I think it's interesting to your points about how the size and depth of that affects the mindset in terms of being sort of more conservative, being less conservative in terms of scaling and all that. In Europe, sort of the European Union, the European Commission, for a number of years has looked at the problem of diverging capital markets. So, different countries obviously having their own capital markets and being less integrated than they would like. And they've looked to regulation to try and achieve that, which on some level makes sense because, sort of a common set of laws and rules is something which sort of does bring capital closer together. I guess the flip side of that is that I think in general, Europe, because of some of its higher sort of consumer protection considerations, it's leaned into regulation in certain areas potentially more than the United States. That might be inaccurate. I guess if you've had visibility of this, I guess it'd just be good to get your views on, in general, sort of the role of regulation and the different regulatory landscapes in, let's say, the US and Europe in terms of how it has affected the investing ecosystem, capital markets, and that sort of thing.
Yeah, I mean, I feel like in Europe, there are kind of different philosophies around taxation. They're different, and kind of within, by the way, within each country across Europe, there's a different philosophy around taxation, different philosophies around privacy, different, philosophies around new market expansion, products that are relevant or products that should be banned. Like the US, in a lot of respects, is still kind of an open playing field where there's very little in the way of limiting factors, in order to kind of cause a limitation or to ban something kind of actively takes a lot of legislature. Maybe it's because it's sort of a newer country, or maybe it's just the entrepreneurial kind of philosophy behind our approach in the US. But I think there are a lot more constraints in Europe. At the same time, constraints can lead to kind of major successes. And, oftentimes because of kind of the constraints that exist in some of the smaller European countries, founders want to be global first. They don't even, we've seen businesses that are based in, call it Stockholm, that actually have kind of all of their business outside of Sweden. If you look at, businesses like Klarna, for example, they started in the Nordics, but it's a truly, truly global business and was from day one. And there are a whole variety of other examples. The Samware brothers building Zalando and Delivery Hero and HelloFresh and all these other businesses are very, very international businesses and have sort of gone way beyond sort of the constraints of local markets. Revolut, for example, out of the UK, way beyond sort of the local market. So I think that, in sort of those constraints, huge opportunities and a mindset around and a playbook around how we can get much, much bigger.
Yeah, no, really, really exciting. And I guess speaking of exciting companies, obviously the last couple of years you've been at Global Founders Capital. And I guess maybe if you could just sort of give I mean, I know it's a diverse range of companies and investments, but give us a sense of the general profile of kind of the companies you look at, sort of the stage you invest in, and perhaps what that might say about where you think there are some sort of interesting trends in terms of both sort of the products and then, I guess, investment opportunities.
Yeah, I mean, I like investing in infrastructure businesses, broadly speaking, whether they're in consumer, or prop tech, or fintech. Infrastructure being the underlying, sort of frameworks for businesses to be built. We're investors in businesses like Deal, payroll and compliance business, which has gone global very, very rapidly and has allowed a bunch of companies across the United States, Europe, Asia, Latin America, to hire and outsource developers or designers or to build local teams in other geos with the click of a button. And that's grown incredibly, incredibly quickly. I view that as sort of an infrastructure play around sort of payroll and compliance. We've invested in businesses like Brex, which is overhauling the banking industry in the United States, but also has a presence in Europe and Asia, Latin America. Like looking at global markets, we're investors in the very early stages in a business called Canva, which is overhauling, sort of design around the world. And by the way, that's another one that's, from a relatively small but wonderful market from Australia, and was global from day one, and is massively, massively used across the United States, across Europe, feels like everyone loves Canva. So, those are the types of businesses that we're going after. And my profile typically is someone who's got just an absolute ridiculous amount of electricity and excitement for what they're building. That level of excitement, I feel like draws in other folks who are also, like-minded, and motivates people to, stay completely addicted to an opportunity. And simultaneously, I like backing founders who've done it before, who've had some, meaningful success in the past, and who have sort of that look on, what the future will be off the back of the category that they were successful in previously. Those are the general kind of profiles that we're looking for.
How do you build those relationships? I mean, obviously, you individually had an incredibly successful track record. Obviously, global founders. Is it just sort of as simple as people come to you? How do you find the opportunities, and then when you found the opportunities, which in many cases they probably come to you, what's the assessment process, or is it sort of that intuitive that it's you get a feel for obviously the quality of the company, the quality of the idea, and then just sort of the general commitment of the founder and their ability to get others interested and excited.
I think you want to help as many people as possible. I think you start with that. I think literally, if you built a specific skill set, like if worked with a particular vertical, and you're an expert in healthcare, you're an expert in energy, you're an expert, then go out and meet people who are looking for more experience and more of a network in that category. And then just follow that thread. Keep meeting as many people as possible who are curious and who you can motivate to become more excited, and who you can kind of dig in with around their interests, and become a mentor, find mentors, brainstorm with people, attend events, and just consistently build, 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 and you'll meet some fantastic people. It's just as easy as that. It's an organic process. Build your brand. You'll find yourself in some serendipitous opportunities, and ultimately, it's all about engineering serendipity, as one of my really good friends says.
And so, in terms of the evolution of support, I mean, is it very company specific? Sort of what is kind of that journey? And it seems as though you get involved at quite an early at an early stage, and so does presumably that means that you're with them for a longer part of their growth journey. Is that correct?
Yeah, 100%. I mean, I think since we've built businesses ourselves, if we get involved at the very early stages, like we're able to help them piece the puzzle pieces together. Like, we know sort of how to put together KPIs and metrics and set milestones, and we understand if there is product market fit or not. And I think we're, great sounding boards across the board when it comes to, launching a business and scaling a business. And so the way that we sort of phrase our approach to supporting founders is it's a pull function. Founder needs help on a specific front, then we're available, and we'll bring in experts. We'll, share our own experience, because we've been there, done that. But we're not like a platform kind of support team like some other funds have, where, we have a finance role, we have a marketing role. We don't really believe that sort of bifurcating those different kind of support functions motivates the investor as much as the investor being sort of intimately involved in making the business succeed alongside the capital that they've invested. So they've got, both sweat equity as well as real capital in the game.
Before I get to my last question, which will, or my last set of questions, which will be, asking you to kind of describe sort of the sense of value that you get from your work, because it must be incredibly rewarding creatively, and also just in terms of the relationship. Legitimately, you're there to help make sort of their career and their passions come true and come to life. I think it'd be really great to discuss how that links into what you say to students or sort of young career professionals, specifically, I guess, from Chicago. But I guess before we get to that, it's obviously sort of the topical issue of the moment. And I guess it would just be good to get sort of some of your thoughts on everything that's going around with AI. And I guess specifically talking to the fact that more so than other technological developments, there's obviously a cultural conversation around it, because I think, from my perspective, correctly, it's going to be transformative in ways that sort of everything we've seen hasn't been, exponentially more so. And so obviously there's a lot of concerns around that, but also a lot of excitement. So I guess just generally, and you're much closer, I imagine, than most. Sort of, what are your thoughts in terms of how the dialogue should be framed around AI?
Absolutely. I mean, I feel like the narrative of AI has come to real prominence off the back of OpenAI and ChatGPT in very recent history. Although humanity's been thinking about AI for, I want to say a century, and there's been, some real prominence around Hollywood bringing AI to the fore and leveraging it as a way to sort of shock and awe people. through films like The Terminator, etc. And then startup founders have leveraged AI in various ways to optimize their software to make things faster, make things more efficient. And ChatGPT is a consumer-facing app that's blown everyone's mind off the back of allowing them to ask questions and get really thorough and meaningful answers. And that's just one kind of, call it, vertical application of what AI is capable of. There's also Midjourney, which is worth taking a look at, which generates images off the back of text. So you can request kind of the creation of something new. Type in warrior surfer in outer space, and it'll literally generate an image of that better than you could have ever imagined. I was at the TED conference recently in Vancouver. One of the founders of OpenAI was speaking and was talking about AI being a tool to help sort of augment everyone's work into the future. And obviously, ChatGPT is already being leveraged in that way. But there were also speakers who talked about sort of a foreboding sort of apocalyptic challenge around humanity sort of eating itself alive. And so
Well, that's quite a contrast.
it was polarizing. Absolutely, it was a
Yeah.
theme that created just a ton of commotion. And there were definitely there were a lot of smiles, there were a lot of frowns. It was a really crazy experience at TED this year. The University of Chicago is starting to do a really great job with artificial intelligence. They have an AI committee, some incredible work around AI into material science. How can you leverage AI to do construction better? How can you leverage AI to do biotech more quickly and efficiently? And I think it's kind of just the tip of the iceberg at U Chicago. They have a new data science program for undergrads. And so folks can study kind of within the computer science department, algorithmic generation, machine learning, NLP, and all of those other, important sort of verticals to build an AI business. So it's at its inception, but great institutions like U Chicago are already embracing it.
It is incredibly exciting, and it's obviously it's fantastic to hear that Chicago is getting so involved in it. And I think one of the things that sort of I think what drives a lot of sort of the AI discussion is that it's essentially about value. Like, I mean, so AI can add value in so many different ways, but sort of like any technology, it also is a challenge to perhaps other values and all of that. And so I guess on the subject of value, listening to you, it obviously there clearly has been so many opportunities to help people and to sort of in terms of the relationship between investors and founders, and sort of obviously everything you're doing at Global Founders. And then obviously sort of the products themselves have obviously opportunities to help. I mean, how do you think of value in terms of a career journey in this space, and what would be your sort of your advice to students? How should they think about their career in terms of in a way that will mean that sort of when they're going through their career they'll find it meaningful?
I mean, we've invested in 30 businesses that touch AI in one shape or form. I love the University of Chicago. Anyone should reach out to me. I think that would be fantastic. I think any, affiliation with the University of Chicago in sort of, the AI world, the venture capital world that touches AI, like, we should be having kind of those active dialogues, 1,000,000%. I think in terms of preparing kind of from a practical or academic standpoint, reading as much as possible, maybe taking a coding class, but not necessarily. Simultaneously, there are going to be a ton of business functions in addition to kind of algorithmic or developer functions within AI. I think it's a category that's going to be, it's already a multi-trillion-dollar market, if you will, because literally it's, you can call it an infrastructure in a lot of respects that a lot of other applications and verticals and industries are being built on. And so, I feel like it's an inevitability. It's a huge wave, just like the internet.
And then taking some of those points sort of beyond AI and just sort of in general, in terms of a career arc, I mean, what would you tell students in terms of how they should think about their career in general, in terms of to make it meaningful? Because I mean, sort of what strikes me from your story, the basics, it's about harnessing creativity. It's about relationships. I mean, in many ways, it's about literally helping people. How should sort of students think about their career, if this, what they should hope their career should look like in terms of like what you found meaningful in your career?
hmm I mean, I would say being exposed to the very best people possible and spending time with them, getting coffee socially, and sort of choosing your, call it, virtual board of directors. Get a group of 8 to 10 people who you respect a ton, who are excited about the category, the opportunity within AI, the opportunity kind of broadly speaking that you're really really passionate about, or maybe you're just kind of developing out that interest, but a group of people who you really, really respect and be in constant contact with them. Get to know them on a level where they know your family if you possibly can, and so you're consistently ideating with them. You're consistently asking questions, getting their perspectives on things, and think about it almost as your broader community. Have that community kind of bring you through their perspectives, and maybe they graduated from U Chicago 20 years prior, 30 years prior, and have a ton of experience kind of building startup companies, or maybe they ran a public company, maybe they, are a doctor, maybe they're an academic. Share your perspectives with them, constantly be brainstorming. And I think that's sort of the best kind of first approach. I think simultaneously, if you're looking to get a job, identify an opportunity, there are a lot of ways to skin a cat. Like if you're going after a learning experience where you really want to become an expert at, call it machine learning, then try to identify the best in class startups, the best in class companies where you're going to, go through a program that actually gets you that skill set that you want, that you can kind of carry forward. If you want, to sort of optimize for putting a dent in the universe and building something completely new, taking a big career risk, I think, you can talk to a whole variety of, venture capitalists who are putting money to work at the very early stages, across really, really exciting founders. I think it really depends on kind of your initiatives and what you're looking for, but it all comes down to, I think, community and sort of that virtual board of directors, so to speak.
From my perspective, has definitely been a huge part of your career. Hopefully, modestly, that's also something that we're hoping to do with this podcast series, because obviously there's a limited ability for people to sort of physically meet or even virtually meet. And so sort of giving alum perspectives and making people aware that you're out there to reach out to and to build some of those relationships.
Yeah, no, love it.
So great. Well, thank you so much. Thanks so much for your time. And yeah, I thoroughly enjoyed the discussion and I learned a great deal. So thank you very much.
Awesome. Thank you